Ladies and gentlemen, do not go anywhere, because coming up next, the mortgage queen herself, Lydia De La Cruz. And now, here's Johnny. Real estate agents, are you struggling with the day-to-day grind, dialing for dollars, putting in hours of floor time with little to show for it? Are you looking for tips, tricks, and tactics to accelerate your career as an agent that will have you closing more homes, working with more clients, and earning more money than ever before? Hi, my name's Cliff Freeman, and I've spent the past 2 decades of my real estate career running one of the top brokerages in DFW and personally coaching over 1,000 high-performing real estate professionals across North America. I created this podcast to share the strategies and tactics you need to explode your real estate business. I guarantee it. I do guarantee it. I want to welcome everybody today. I hope your Memorial Day went well, and if we got an exciting show for you, none other than Lydia De La Cruz, and she's a local gal here, but I'll tell you what, when it comes to printing money, she can do the job for you, and we're going to take you down and show you exactly why you need to hire an expert, a loan officer. If you're a realtor out there in the audience, I want you to get your notepad out, a full pen, ready to write some notes down, because we're going to load you up and unpack everything you need to know to be successful and hire the right loan officer. Trelvis, my friend, how are you in the cockpit back there, sir?
I'm doing good. I'm good. How about yourself?
Hey, I'm doing all right. I'm a lot more comfortable knowing you're in the control room there for sure. I guarantee. How was your Memorial Day? I'm sorry.
It was good. It was. I was gonna say that intro almost threw me for a little minute there.
Here's Johnny. So what movie was that from? You remember?
You know what? It's The Shining.
The Shining.
Yeah.
Okay.
It's The Shining. You can say Lydia gave me a little extra credit help. I'll credit her for it.
She's very helpful. I'm telling you, she's incredibly helpful. I was just going to say, who's that guy? Matthew McConaughey is who I look like, right? Don't I look like him?
You know what? I was going to say that same thing, Cliff. Yeah. It's like you're reading my mind right now.
Yeah. It's funny. My son said I look like Joe Walsh when we went to the intro of the Eagles. I'm like, I must have the nose going today.
Yeah, definitely.
I love it. I love it. So, wow, am I ever super excited? I've been in this business 33 years now, going on 34. I was actually a lender myself for a number of years. And I can tell you what, when you're a real estate agent, there are some very key people that you want to have in your life. And one of them is a great lender. And we're going to talk today a little bit, as I introduce Lydia, about why it's important to have a great lender by your side and the difference it can make. I mean, it's going to put thousands of dollars in your pocket, right, C3?
Yeah, definitely. I mean, some of the greatest incentives and benefits I've seen.
Yeah. So let's find out about some of those things, Lydia. First of all, welcome to the show. We're super excited to have you today.
Welcome.
Thank you so much. It's my privilege to be here amongst the greatest.
The greatest, yes, yeah. The goats. Is that what
goats.
You're saying? The goats, yeah. Calling me a goat. All right. Yeah. Well, it's great to have you here, and gosh, I have really been super impressed, and as a coach for top realtors across the country, I've always said, you need to get a lender who's going to put their money where their mouth is. And what do I mean by that, C3?
I mean, like you just got to, put your money where your mouth is. You got to, put money out so that, you can get some back, right? Or however you want that to be.
What I'm talking about is that guarantee that Lydia
guarantee,
has.
that's right.
Now, what's that guarantee, Lydia?
Oh, that's a $1,000 close on time guarantee.
Did you guys hear that? $1,000 close on time. Now, if you're watching the show, if you like that, give us the thumbs up, give us some love. If your lender's doing that for you, I want you to write your lender's name in the comments section, because we want to honor them, okay? Because I don't know very many lenders that are going to put their money where their mouth is like that. So what does that mean? $1,000 on-time closing guarantee. What exactly is that? Is that just is that poof, or is it sales poofing, or is it something real?
No, it's something tangible and real that we stand by. Obviously, there are parameters around it. However, we don't have to pay that out because we are that effective at Supreme.
Okay, so what if your client goes and buys a new John Deere tractor and finances it the day before closing and it messes up the loan? That's not your fault, right?
Correct.
So is that one of the exceptions where you guys
Correct.
don't pay? Okay.
Where the ownership falls on us, if we have any implication in the closing delays as a result of a failure on our part,
Okay.
then they have that $1,000 close on time guarantee.
But you haven't had to pay one of those out?
No,
Okay. And that's because you close on time, right?
absolutely.
All right. So you know our audience here. We've got seasoned agents out there that watch. We've got brand new agents. We got people thinking about getting in the business. I want to go ahead and go right to the meat of the coconut. Let's see if we can just pour some value on these folks out here. And I'm going to do a little scenario with you here. Pretend that I'm a new agent and I'm approaching you and I say, Lydia, I don't really have anybody that I work with, and I don't even know what questions to ask a loan officer if I interview one. What questions would you recommend that a new agent ask a loan officer that they're interviewing?
I think most importantly is how efficient they are, their turnaround times, because in your world, it's contract based. And the quickest way to lose a client or a contract or the potential for clients in the future is by not closing on time, having delays. Same on our side. If we don't deliver, the realtors are not going to trust us with their future business. Therefore, they would want to know what their turnaround times are so that they can establish the contract accordingly. Is it a 30-day close? Is it a 15-day close? Depending on the market and where we're at with turnaround. With COVID, there are some impacts, but are they effective in that? Is that loan officer, how long have they been in the industry?
Okay.
What's their lock pull through?
What's their lock pull through? C3, define, please.
What is a lock pull through?
What is a lock pull through?
Lock pull through means if I build a loan and I lock in the interest rate, is that loan going to fund? Or
Okay.
will it fall out of the pipeline?
Okay.
Meaning, is something going to go awry?
Right.
Because that will be very telling of their level of expertise
Okay.
and efficiency.
All right, so let's do a little deeper dive into that. If they have a high fallout rate, what's that a symptom of? What are they not doing correctly in the beginning?
They're not pre-screening and vetting out their clients.
Okay.
They're being sloppy. The way I call it in loose jargon is throwing it against the wall like spaghetti and seeing if it sticks.
Okay, all right. I can appreciate that.
It's sloppy work. They're not collecting the right documentation, or it could be a problem with the lender itself and their practices, their underwriting practices, and things
Okay.
of that nature.
So I'm a new agent. Gee whiz, Trelvis, I would have thought that something else would have been most important, like the rate. Doesn't that seem like that's going to be important?
It seems like it would be important to my pockets. I can tell you that.
Yeah. So why isn't the rate the most important thing now?
Well, the rate, we all get the same rates. We all get
Okay.
rate stack from the same.
Now it's different though, right? Since Dodd-Frank, since everybody now you have to declare whatever it is you're going to make on a loan when you sign a contract with a lender, and so truly what we used to be able to do with overage, as we called it when I worked for CTX, we had a little bit more of a room to play to build in a little extra money for the loan officer, and so I understand now that that's not the case. Can you explain a little bit about how pricing works and what you are able to adjust the rate for if you want to do so?
Yeah, we all get the same rate stack. Each lender has its individual pricing, but they're going to be pretty consistent across the board. Rate it can come into play, but people put so much emphasis in it when it has a nominal impact to that monthly payment. The difference between a 4.25 and a 4.5 payment is very nominal. Are you willing to make that sacrifice to go with the lender? Maybe they have a better rate, but they can't get your loan closed on time. They're going to extend that contract, or maybe they're not going to underwrite it properly or vet it out.
All right.
Are you willing to put your name on the line for that client? And there's so many variables to it. That's why we have a beautiful tool that provides that transparency to our clients. We can play with the rates to be able to show them the difference in the variance of short-term and long-term benefits associated with those rates.
Right. I got you. Okay. Now, so I'm a new agent here, right? So I'm thinking, well, gosh, if it costs me an extra $10 a month to use a pro, okay, versus an amateur, let's think about, I mean, I saw somebody put a post up in Facebook yesterday that said, if you think it's expensive to use a pro, wait till you hire an amateur, right? Okay, so I'm thinking there's 360 payments times $10. Well, that's 30 years. That's $3,600. That's a lot of money, you know, because I'm new and I'm not really thinking this all the way through. But there's a couple things that really don't add up here. Number one is, how long does the average 30-year fixed mortgage live now before it gets either paid off or refied?
The typical life cycle of a mortgage is anywhere from 3 to 5 years because people refinance or sell.
3 to 5 years.
On a 30-year note.
On a 30-year note, right.
Yeah.
So the reality is you're going to refinance that note anyway, or you're going to move and sell your house. And I mean, I think a lot of people don't understand that. They think that they're really going to hold on to their mortgage for the full term of the note and pay it. My parents did that, but that was back in the day when people weren't moving every 5 to 7 to 9, whatever the number is now. People are moving less because of inventory, and we've got multi-generational homes now. But you know, the reality is that those loans don't have that long of a life, and that's they get paid off early. All right. So what are some more questions if I'm new and I'm just trying to find out how to vet what about the kind of entity? Should I be looking for a mortgage banker with a drive-through window?
If you want to get run into trouble, do you want to get?
If you want to get a number one with cheese and curly
fries,
yeah,
absolutely.
Okay, so the reality is that if your person you're borrowing money from works for a bank that has a drive-through, you really need to find somebody that doesn't specialize in deposits. Okay, mortgage bankers, right, which are bankers, and we'll talk about here the difference between bankers and brokers. But mortgage bankers have their own line of credit. They don't take in money through the drive-through. They typically borrow through what's called a warehouse line of credit, right?
Correct.
So, Texas Capital, whoever bank or whoever is going to loan them, millions of dollars so that they can originate these loans, hold on to them for 30 days, get that first payment, season it, and then sell it into the secondary market. Something along those lines, right? I mean,
That's
pretty
correct.
close. Okay. Let's talk about why it's better for the realtor to use somebody who is a regional mortgage bank instead of a money center bank like Chase, Bank of America, Citi, even USAA. Sorry to put you under the bus. I love USAA, but their mortgages just aren't it's not the best thing that they're the best at, right?
There, you do have your pros and cons. Not to slight anybody in the industry, any of my peers, but I will say you get a hands-on experience when you're dealing with someone like myself, where you get that communication, that understanding.
So you're a single point of contact, right?
Correct.
You're quarterback in the entire process.
I'm the captain of the ship from start to finish.
Okay. So when that loan goes from you, the origination, into processing, and then from processing into underwriting, we're talking about down the office, right? We're not talking about going from Dallas to a processing center in Phoenix and then it gets underwritten in somewhere in California.
Absolutely
right?
not. We are all in-house. We communicate effectively. I know exactly who to go to for what, which adds to our efficiency.
Okay, so as a realtor, if I call my loan officer at the mortgage bank, they can know exactly what status that file is in instantly, and they still are able to see what's going on their screen. It's not like they originate it and then it disappears into this vacuum.
Correct.
Right? Until it comes out the other end.
Think of the frustrations that are a result of calling a call center. How many times have you needed to know what's going on with title? Where's my appraisal? Are we going to close on time? Has the closing disclosure gone out? And you can't get a hold of someone.
Right.
And one hand doesn't know what the other is doing. I know exactly what's going on at all times. And
Okay.
if I have any questions, I can go directly to my underwriting team, to my operations team, to my processors, and I can get it done. And I always provide a response to not only the buyer's agent, but the seller's agent, because
Okay.
they are involved and they are part of this transaction, and they want to know. They want to be involved.
Okay.
You want to know, are you going to get paid off of this? Or are we going to drag this out another month? Am I going to have to renegotiate a contract? Am I going to have to do a lease back? Am I going to have to do, what's going on with the housing situation, the moving situation, all of those things? There's so many moving parts that can impact so many parties. That is why it's so important that you can have that efficiency, that close on time guarantee, that communication, so that if we do run into something, I love giving great news. Everybody loves giving great news. Who doesn't love that? Mm-hmm. But when there's a problem, the speed with which you communicate that has to be double the time, because we need to come up with a solution or vet out how we're going to approach this.
And on the way over here after lunch, we were talking a little bit about some of the crazy things that you've witnessed and seen. I want to get to those in a minute, but I still want to make sure that we're laying out a clear path here for new agents when they're seeking out loan officers and interviewing loan officers. What about loan officers and new agents? New agents require more hand-holding. What kinds of things as a new agent should I be looking out for? And I like to use the term bedside manner, because there are some loan officers who will put that effort in like a good doctor, to really go the extra mile for you. And then there are others that just, they're too busy, they don't want to mess with it. Where do you stand on that, on working with newer agents?
Well, for me, a purchase transaction is about building a relationship with the client, building a relationship with your realtor, and it's not transactional. Some loan officers, they're more clinical, they're more transactional, and just like we said, if we go to the Burger King drive-thru, it's like, then you got to deal with all the other individuals. You don't get to speak to that person, or they work the doctor's hours. I can be reached at any time, whether it's in the morning, on the weekend, in the evenings. We have remote access. We can plug in, take care of it. You need a pre-qualification on the fly to make that offer, because it is a competitive market. And so you need to have someone that's reliable.
I got to tell you, you make a point, and we're not asking you to work 24/7, but let me tell you something. When our leads come in on the weekends, and we work retail hours, folks. We're in the real estate business. We are retail hour workers, because we have to work when our clients are not working. So we're showing houses in the afternoons and evenings and on the weekends. And if you can't get a hold of your loan officer, a lead comes in, they want to go look at houses, and they can't cut a pre-approval for you or a pre-qualification letter for you in a matter of 10 or 15 minutes. That's literally how long it takes usually, right? A phone call, of course you're not going to verify docs and income and all that, but you can at least get enough information to run DU and get an approve eligible, which means that they're bankable, they're fundable, and get that over to an agent, because they're all, they're going to look at new open houses, they're going to look at new home builds and things like that. So you've got to have that accessibility, right?
Absolutely.
Okay, so I think that's all I can. Anything else you can think of for newer agents and what they should be looking out for?
Well, also one thing is, a lot of times realtors will send us leads, but your loan officer doesn't help with marketing you or generating a new business for you. And that's where we are very unique in that capacity.
I am so glad you mentioned that, okay? So take notes. This life that the realtor and the loan officer live together is a symbiotic relationship.
Absolutely.
That's an SAT word. Help me, Travis. Let's see.
Symbiotic. That's biology?
That means it's like that shark. Do you know that shark? You've seen a shark, right? You've been scuba diving, Travis?
I've never been scuba diving, but I have seen a shark before.
Okay. Well, you've seen Shark Tank anyway, right?
Of course. Absolutely. Absolutely.
So symbiotic, these little fish that swim right up next to the shark. Now, if the shark wanted to, they could turn around and eat these little fish right up. It'd be like shrimp cocktail. You know what I'm saying? But the shark doesn't, because those little fish serve a purpose.
Right.
What do?
Clean them.
I think they clean the shark, right?
Clean the barnacles off of the shark, right? And so they live together, right? It's a symbiotic relationship. It's the same thing with us. The realtor generally is the one who starts with the lead, generally, in most relationships. Now,
correct.
let's clarify that. Most relationships, the realtor brings the kill to the table and then feeds the loan officer, the home inspector, the appraiser, the insurance company, the title company. Everybody eats off of the realtor's plate, right? Now, the point you just brought up is really important, because when you think about it, in all fairness, the realtor's doing all the heavy lifting, right?
Right.
Makes sense?
Yeah.
Now, what are you suggesting? You're starting to tell me something different here.
Well, absolutely. There's a give and take. You've got to create the WIFM. What's in it for me? And the benefit. We need to, if we dance appropriately, then it's my job to vet out your clients, make sure that you close on time, but also help promote and reward you for the leads that you're generating for me.
Now, clearly, we're all familiar with respite, right?
Correct.
We're not by any stretch of the imagination suggesting you cross the line there. But there are still things that we can do together, even more so than with title companies because of P53 and some other
Absolutely.
Texas rules. But we're still able to co-market and to work
Exactly.
together, open houses and everything else. And you've got to have a lender who's willing to roll their sleeves up and get out into the field and help with that kind of thing too.
Put some skin in the game.
Put some skin in the game. Yeah, exactly.
Yeah, good stuff.
Yeah, for sure. All right. So, well, that's awesome. It's such an important thing. Those early relationships, when you're newer in the business, can really determine whether you succeed or don't make it. And so you've got to be really careful about that. All right.
And it's back to asking, the important questions too, right? You have to make sure that you're asking the right questions to the LO that you're partnering with. So
yeah, it's all about the right questions. All about the right questions. All right. So let's people want to know about Lydia a little bit. Tell us a little bit about yourself personally. This is a reality show. We're real here. We're going to give Joe Rogan a run for his money one day. But what's the story with Lydia? How did you get into this business?
I was a spoiled daddy's girl that did not have a lot of ambitions, and after school I traveled quite a bit and was laissez-faire, and Papa was like, baby girl, it's time for you to go to college or get a job. And a friend of the family actually hooked me up with a job. It was a 30-day collection job at the financial institution, who shall remain nameless. Got 6 years in that industry, and I moved my way up. It was servicing in default. Was something that I was very fascinated in, the puzzle of the situation, and I've always enjoyed helping individuals. And so through the natural progression of my career, that's a privilege that I've had. On the default side, foreclosure prevention, escalated issues when I was in the executive office for people dealing with predatory lending, or maybe an issue with the loan servicing in some capacity. So you had to be a mortgage CSI.
Okay, CSI. I like that. CSI.
I used to love that show growing up.
Yeah, no, but it draws,
Yes,
because there was, back in the day, and I'm talking about the day being 2005, 6, 7, 8, back when we had all of the mortgage fraud going on. And I was actually on the Texas Mortgage Fraud Task Force, and we helped draft Bill 766, House Bill 766, that now is a disclosure in closings. But there were so much mortgage fraud, straw buyers. It was really crazy. And for those of you who lived in this area, there were some really hard hit areas, especially up in Frisco and McKinney and even in Prosper, where mortgage fraud, California buyers coming in with no idea, sight unseen, buying houses, overpaying for them, and then walking away from them when they couldn't get tenants to rent them, and just all kinds of crazy stuff. But you were the face of that. You saw that, and what a place to cut your teeth in the business, because a lot of mortgage people start and all they get into the business for is that, I can make a ton of money, right? And I don't really have to have a conscience. But you've seen it from the dark side of things, where people were losing their homes, getting kicked out, and so forth. And we've lost over 30 million jobs here with COVID-19 in the last couple of months, right? I want to pick your brain a little bit and ask you, what do you see that's different now about this recession that we're facing and the crisis? I mean, there was a crisis in the servicing part of the business for a while.
Correct.
As the government came in and squeezed the servicers, offering 12 months forbearance and so forth. What is your take? I mean, you've got such a depth of experience and knowledge in the business. What do you see how's this going to play out and unwind ultimately?
Well, honestly, we're in uncharted territories, so I can only speculate. There's no historical wavelength that we can really follow. But from what I see, the legislature changes, the guideline changes have served to be a protection to stop the bleeding. And even weekly, we get updates with regards to industry standard changes.
Talk about some of the changes, some of the industry standard changes you've seen.
Absolutely. With regards to FICO score requirement, where I used to be able to originate a loan, an FHA loan at 580 FICO, it's out. A lot of the major financial institutions aren't lending below 700. Some have raised it to 720.
Okay.
I have the capacity to do 640 on government loans and 620 on conventional loans.
Okay.
A lot of the bond programs are out.
TDHCA is still up and running, right?
For now, yes.
For now?
Yep.
Okay. USDA?
USDA.
Okay.
VA.
Tell us about the jumbo market.
Jumbo market has shrunk a little bit, for sure. All industry standards have become more conservative with regards to employment verification, with regards to self-employment. So there's a lot more paperwork involved, which if you're not educating your client and preparing them for that or explaining that, it can create the illusion that you don't know what you're doing.
All right. Okay. We're going to kick it up a notch here, okay? So let's talk about QM and non-QM loans.
Correct.
And how that's impacted things. Tell us a little bit about sort of the mortgage market liquidity now. And we've talked about scores going up. Are any of your lenders putting additional overlays on top of the Fannie Freddie regs right now? Are you seeing that yet?
There are, but Supreme has maintained limited overlays, obviously conservative to its nature, but we still have some flexibility. But a lot of lenders are putting additional overlays. They just don't want the risk. They're taking that. They have to stop because we don't know how far these default ratios are going to climb. Okay. And to be candid, banks make their money off rates and fees. Yeah. Rates are awesome right now. Right. Fantastic.
Right.
But if these default percentages continue to climb,
yeah. Well, the 10 years at an all-time low, and we've seen the spread between the 30-year fixed-rate mortgage and the 10-year increase a little bit. I saw today where mortgage rates were down a little bit more. I don't know if you had a chance to check on rates today or not, but we're going to start to see there's a lot of disequilibrium in the market right now, and the market's still trying to really sort out the pipeline. Have you seen any other types of signs that there are liquidity issues in the mortgage market, or is there anything that would give you an indication as a predictor that we could see some rough waters going ahead getting mortgages? With
the limitation of options, I mean, with regards to your QM versus non-QM, okay. Bank statement loans, that's a riskier portfolio.
So all of the Nina, the Penta, the Santa Maria, the no income, no asset, fog up a mirror loans, those are gone for now, right?
Few and far in between, yes, okay. Absolutely.
Right. I think Guido, I saw him down on the street holding up a cardboard sign saying he still does no income, no asset loans.
Correct.
Right? Yeah, Guido the leg breaker. Yeah, he was down there. Interesting. Okay. Anything else on the horizon that you've got your ears to the tracks? What's the buzz around Supreme? I mean, are you guys optimistic about rates? Are you optimistic about what do you see in terms of purchase applications in your shop?
We're still booming.
Okay.
But we also have in our branch, we have a relationship with a builder. We are their preferred builder, and we've closed about 80 loans for them. We're the number one branch for purchases.
Okay, we should have talked about this perhaps when we were talking about questions for new agents, but let's take a minute or two here and talk a little bit about the relationship that you have with a builder in particular and why that's important to an agent.
Well, absolutely. I work for the American Dream Team. at Supreme Lending, and we have an exclusive relationship with First Texas Homes. And so we are their lender of choice, and we close a good majority of their loans. And as a result of that longstanding relationship, our ability to stand by our commitments and get the job done, there are a lot of incentives, both for the client, the realtor, and all parties involved.
Okay.
And so what that creates, especially in today's environment, is an outside of the box way to market to your clients. With social distancing, you can't do an open house as easily as you would. You're not necessarily as inclined to go cart around a client without vetting them out first. That's what we're here for. So as you said, the traditional format is you're the customer facing person, so they're going to reach out to you. They get excited, you entice them, you show them the sexy part of the business, right? Show them all the homes and they get excited. Then they figure out their financing afterwards, right? Where now there should be that shift. Protect yourself. Make sure that you're not wasting your time, money, and efforts on someone that's not a viable candidate. And because industry standards are changing so quickly, you want to make sure that someone has their heartbeat to it and understands what they're doing.
Totally. Yeah, you definitely want someone in tune with the current mortgage space and what's going on with that. Yeah.
Yeah.
So getting back to the First Texas Homes,
Yeah.
we have this beautiful website where they have online virtual tours that you can entice your client and show them and be able to present that home to them. Since there's limitations on the open houses,
Right.
you can present it on social media. We have our co-branding. If you are one of our Texas top producer realtors, it's easy and free to enroll. And we can share as a loan officer, you can share, and we can send it via email. We can post it on social media. We have an in-house studio where we can do little video clips or co-branded digital marketing of any type. And that's why First Texas trusts us.
Okay, that's right. And I've been in your studio before. I was on in fact, I did a little show there with Freeman Sawyer and on the top Texas Top Producers Network, and that's great. And you guys also do some cool stuff with Nebraska Furniture Mart,
Absolutely.
I know, and things like that. One of the things that realtors that we struggle with is, we get a client all the way over. We've gotten them through the pre-approval process. We get to go take them. Now they want to look at new homes, and we get them there, and all of a sudden the new home salesperson goes, oh, by the way, there's a $4,000 incentive if you work with our lender, right? And so that lender is somebody you don't know. You've never had a relationship with them before, but you guys are able to work with either resale or new build and still be competitive, which is really an awesome thing. And in fact, you guys can drive that competitive advantage you have on the new build side to the resale market, and so help with closing costs and that kind of thing for buyers, are also an opportunity that you can a benefit that you can deliver
Absolutely.
to buyers.
In simple terms, I am not qualified to turn down a deal.
Right, I got you.
We will go above and beyond to make it work.
Above and beyond. I like that. Above and beyond. Isn't that a great thing? So it's surprise and delight is the term I like to use, right? That's a good one.
I've never heard you say that. That's nice.
You haven't? Well,
Yeah.
you should be a customer of mine sometime. I'll surprise and delight you, That's the whole plan. Well, gosh, I'm just looking at the clock over
cow.
here. Can you believe this?
Went quick.
This is the fastest show in the history of Cliff Notes,
yeah.
I think. We are out of time. I can't believe it. But Lydia, if someone in our audience wanted to discuss further with you what some of the things we talked about on the show today, we'll go in and put your contact information in the comments when we're done. But how can somebody get a hold of you if they'd like to speak with you?
Well, they can reach me on my office line, 469-620-7041. Or on my cell, I always give it to my realtors. It's 469-657-5385. Or you can email me, Lydia, Lydia, .delaluz, DELALUZ, @supremelending.com.
Wow. I just love the way she said that.
And I'll tell you what, if you haven't checked out their office down in Addison,
it's
it's
nice.
sick. They have a really nice studio in there.
The studio down there is very cool.
I mean, it's a really nice. I mean, you can't compare to this, right?
There's nothing like that.
Nothing like having Travis behind the wheel.
But they do have a nice studio down there.
Yeah, it's a
too,
great
so,
setup they have there.
They open it up to our friends. But if you guys need something really good, come see Jeff Crilly.
Yeah, for real. Yeah,
Real News PR and our friend Trellis.
You guys are too kind. You guys are too kind.
Some fancy digs.
Yes, indeed. All right. Let's see. Next week we got special guests. I can't know if I can let the cat out of the bag or not yet.
Should we?
I better wait on that.
Yeah, let's wait.
I want to make sure it's confirmed. But make sure you tune in next week. Lydia, thank you so much for being here. Really
Thank
appreciate
you
it.
so much.
And
It's my privilege.
originally hails from Puerto Rico.
Puerto Rico.
Yes, we love Puerto Rico. And all our
Bilingual.
friends. Yeah. So,
also bilingual.
Yes,
yeah,
that's
forgot
right.
to mention that.
Yeah.
So.
Fully fluent.
Yeah, fully fluent and
Contractual.
contractually fluent.
Yeah.
So that's a real plus too. So
Exactly.
anyway, ladies and gentlemen, the audience, we really appreciate you being here today. Hit the heart button, hit the thumbs
like.
up button, show us some love, and we will see you next time on Cliff's Notes.
Right here.
We go. All right.